Hi, welcome back to my channel. If you are new here, I'm William. On this channel, we talk about everything related to personal finance and building wealth. Today, we are diving into a crucial topic for anyone looking to manage their money wisely in Kenya by understanding different types of accounts available. Whether you are just starting out with your first account or looking to diversify, well, this video will help you make informed decisions. Let's get started. Current account. This account is meant for daily transactions, such as withdrawals and deposits using checks, debit cards, and electronic payments. This account doesn't earn you interest. So I will recommend, if you are not a business owner, you can use it to deposit your salary. Do you remember this video where we talked about automation? Automate this account so that when your salary hits this account, it's distributed to various accounts. No need to sit down every month with a pen and a paper doing transactions. I encourage you to balance this account every month to confirm if the transactions went through. For an individual account, open this account, but there are things to consider first. Number one, know what type of account you want. Is it personal current account or a business current account? Because these two differ in features and benefits. Number two, minimum balance required to open an account. Number three, overdraft facility. This is a loan given to you when you withdraw more amount in your account than the actual balance. Number four, fees and charges. Not only should you know the type of fee, but also when you incur them. Is it monthly, semi-annually, or annually? Number five, online services. This also should come hand in hand with customer service helpline, which should be available 24/7. Savings account. These are accounts at financial institutions designed to hold your money. So you keep your money with them while it receives modest interest. For me, this account, I use it only to make those once in a while purchases and also to receive returns on my investments. You will be able to access your money at any time, but some have withdrawal limitation, so it's advisable to know the criterion. Now let's look at other criteria. A, interest rate. It's a percentage you earn as returns on your deposits. The average rate in Kenya is 7% per annum, which is very minimal considering withholding tax and institutional fees are exclusive. So the rate will reduce to about 4% per annum. This won't assist you because your money is eaten up by inflation, which is now at a rate of 4.6%. My rule in investment is this: to keep my money where the interest rate is above the rate of inflation. You can follow it. B, accessibility. In some savings accounts, you can only access your money twice a month. So verify the liquidity involved in their system. C, minimum operating balance. D, charges and fees. E, payment cards. Since it is where you keep your sinking funds. Wait, let's go together. Sinking fund is an amount set aside for a specific purchase or activity. So this amount needs to be readily available, and having payment cards like debit cards will really facilitate the process. Money market fund is a type of a mutual fund that invests in debt securities characterized by short maturities and minimal risks. Do you get it? If not, forget about it. If you can't explain an investment to a 10-year-old kid, then don't invest. In layman's language, MMF, or the money market fund, is whereby a company collects money from people to invest it and give them returns. It has become very popular in Kenya and investors are really taking advantage of it, with an average rate of 13% per annum, with even some of them going beyond 17% per annum. Examples of money market fund are Etika, Cyton, Sanlam, Britam, etc. For you to open one, you will be required to have an ID or a passport, a KRA PIN, and also you'll be required to have your recent passport photo. Now, why pick money market fund if you are a beginner in investments? 1. Your principal amount is safe. Why? Because they are regulated by CMA and your money is kept by the custodian, who is a different institution. 2. Liquidity. You get to access your money anytime through a bank account or M-Pesa. However, some have limitations on the number of withdrawing transactions. 3. Competitive returns. They have a higher rates than what is offered by other institutions on saving accounts. 4. Low amount to start. With the likes of Etika, you get to start investing with Kenya shillings 100. Fixed account. These are accounts that pay investors a fixed return upon maturity at a given period. Requirements differ as it is both offered by commercial banks and also insurance and credit institutions. The advantages of this account is that your money is safe and secure. You can also use this account as loan collateral. In most cases, you can access loan at most 80% of the amount in this account. Another advantage is that it gives you discipline, since you can't withdraw before maturity, and if you do so, you get a penalty. My theme on this account is that I can't invest in a fixed income account which doesn't give me above 1% per month. So remember, charges and withholding tax apply. If you like credit facilities, then the next account is yours. SACCOs, Savings and Credit Cooperative Societies. These are financial institutions controlled by members to offer credit and savings. What are the things to consider? Credit eligibility. For you to get a loan, the first criteria they look at is that you have been a member within 6 months and you have been able to pay monthly deposits successfully. Monthly contributions. Share capital. For example, if a SACCO requires you to be a member by buying a minimum shares of 100 at Kenyan shilling 200 per share, then the share capital will be 2,000 Kenyan shillings. Process of termination. Most people don't investigate this when joining. Your share capital is non-refundable. Only your deposit is refundable. But a few clever members tend to find loopholes when they want to terminate. So what they do, they borrow loan against their shares. Past history. Be it returns or shady activities, do your diligent research before you join. They say history repeats itself. SD account. Central Security Depository is a financial market infrastructure organization holding securities such as shares. Not only shares you can use to buy with this account, but also T-bills and T-bonds, which are treasury bills and treasury bonds. You are required to have a KRA PIN, an ID, and a passport photo when opening this account. To register, just download the CSD app and fill in the required information. Last but not least, health and retirement. With health, NHIF cover is not enough because sometimes it doesn't cover all medical expenses. Get insurance on your health or go beyond by getting a life insurance cover, which can cater you in case of disability at work or your departure from this world. With retirement, check out the website of Retirement Benefits Authority and select the company you feel will satisfy your needs for retirement. Thanks for sticking around and learning all about the different types of accounts you need to manage your finance effectively. If you have found this information helpful, make sure to give this video a thumbs up and subscribe to the channel for more tips and strategies. In the coming videos, we'll dive into the exciting world of investments. You won't want to miss it. Until next time, take control of your finances and start building the wealth you deserve.